Wait a second. Was Blackstone part of the private equity consortium that offered 14 billion euros to buy Adevinta, but at the same time was part of the private equity consortium that offered the 4.5 billion euro unitranche loan that was part of that same deal? How does that work? Well, in our April 2024 video newsletter called Mink, which you should subscribe to in the link in the description below if you don't already receive it, we took a deep dive into the Adevinta deal, where we look at the private equity side and the private credit side. And as I mentioned, Blackstone was on both sides. Stay tuned to learn more in our Mink video newsletter. In this edition of Mink, we will walk you through the Adevinta deal, a recent deal where a private equity consortium, including Blackstone and Permira, are acquiring Adevinta. We'll go through the history of Adevinta, followed by the details of the deal, and then we will analyze the deal. So let's get started with the history of Adevinta, the Norwegian company that owns some of the most well-known classified brands around the world, including Leboncoin, Fotocasa, and Kijiji. The history goes back over 180 years. Back in 1839, Christian Schibsted founded the Schibsted Publishing Company. And many years later, in 1992, what was then called the Schibsted Media Group went public on the Oslo Stock Exchange in Norway. In the year 2000, Schibsted established Finn.no, which soon became the leading online classified site in Norway. Over the next 19 years, Schibsted built and acquired marketplaces around the world in 19 different countries. In 2019, the international classifieds portion of the business was separated from Schibsted, became Adevinta, and went public on the Oslo Stock Exchange. Fun fact, did you notice how the logo has the Greek letter delta in it? Well, it was designed to show how Adevinta is looking forward to change. Even though it's been many years since I completed my math degree at the University of Waterloo, I have to mention that delta is in this logo. In 2021, Adevinta's company changed dramatically with the purchase of the global eBay Classifieds Group. And in early 2024, at the time of this video, Adevinta is one of the largest online classified groups in the world. So let's move on to the details of the deal. According to Bloomberg, a private equity consortium, including Blackstone and Permira, has offered to bring Adevinta private at a price of approximately 14 billion euros, which includes debt. eBay, which is one of Adevinta's largest shareholders, has agreed to sell half of its shares and will plan to own 20% in the newly privatized company. The deal included a 4.5 billion euro unitranche loan that was made by a group of lenders, including Blackstone, the large Canadian pension plan CPP Investments, and the large Singaporean sovereign wealth fund GIC. Also to mention, Adevinta is receiving an additional 250 million euro revolving credit facility. So let's analyze the deal. Hold on. Did we say that there was a 4.5 billion euro unitranche loan that was offered not by the banks, but by private lenders? This is another example of how private credit funds are involved in large private equity transactions. Just a reminder, a unitranche loan is a blend of senior and subordinated debt. But wait a second. Blackstone is part of the private equity consortium and the private credit consortium? Is that a mistake? Well, no. Blackstone, like many other alternative asset managers, has private equity funds and private credit funds. Do you remember one of our first video newsletters back in August 2021, where we covered the Stamps.com deal, the $6.6 billion deal where Thoma Bravo was both the private equity buyer and one of the private credit funds that offered the $2.6 billion unitranche loan? Well, this phenomenon of having the same company being on both sides of the private equity deal is not a one-off occurrence. Private credit funds are continually involved in private equity deals. Now, up to now, this hasn't been an issue. Companies have been surviving, and the private credit industry really hasn't been tested since it started to grow after the financial crisis. In the event that some of these companies face financial difficulties and need to restructure, it will be interesting to see how the conversation between the lenders and the equity holders goes, especially since you may have the same company on both sides of the table. Investors. Many private equity deals are turning to private credit funds for loans. Even though the industry hasn't been tested in a downturn, it is another way to access the private markets, which could add diversification to your portfolio. As for what will happen in the event of restructuring when the same firm is on both sides of the table, I'm not sure, but I'm interested to follow along to see how that plays out.